To discuss in an exclusive interview is KeyCorp CEO Chris Gorman. Chris, thank you for joining us. I appreciate you guys speaking out. I can't imagine what the last, 72 hours have been like for you. How have you been reassuring your customers?
Well, first of all, thank you for having me on, Sarah. We have been out just talking to our customers in the ordinary course. And so it isn't like we're doing anything differently than we always do. Just in the ordinary course, we're out talking to our retail customers. We're out talking to our commercial customers. And, it's business as usual. But it certainly has been an interesting 72 hours, to your point.
I mean, business as usual with your stock down 30%. Have you seen any deposit outflows?
Now, what's interesting is we really have not. And we obviously are watching our deposit outflows carefully. In fact, over the weekend, we had the biggest deposit growth in our retail business that we've had year to date. So we've been really pleased with the stableness of our deposits, and we've actually enjoyed some deposit inflow.
What about the other sort of piece that everybody's worried about here, which is how you're funding those deposits and the kind of duration risks and what kind of losses you have on the balance sheet? What can you tell us there?
Sure. So obviously, duration risk is important. As we look at our portfolio, 50% of our portfolio is 3 years or less in duration. So we're fortunate in that we have a very short durated portfolio, which is obviously pretty helpful when you're in an environment like this.
So are you saying that you've been a beneficiary of some of the outflows that we've seen from Silicon Valley Bank and Signature?
Well, we're part of the whole banking ecosystem, and we've been pleased to be able to serve clients who actually, on pretty short notice, were looking for a home. So we have been able to serve some of those clients, and we've been pleased to do so.
Chris, I don't mean to throw fuel on the flame, but I wonder if you think there's merit in this argument that certain elements of the VC world tried to foment worry, I won't say panic, but worry in an effort to get policymakers to back them up in ways that really weren't relevant to retail depositors in this country.
Oh, Carl, I'm not sure exactly, who was fomenting what concerns, but clearly SVB, have a business that's concentrated around an ecosystem, and that ecosystem is obviously very connected to many parts of the economy.
So what is all this going to mean, this fallout and the pressures we saw in the banking system? What's it going to mean for loans and for lending standards?
Well, I think lending standards, I think people will tighten their credit boxes. I think people are focused, obviously, on liquidity. But the banking system is in great shape. I look at credit metrics all the time, and not only our credit metrics, but really across all of the regional banks, credit metrics are in good shape. So I think you'll see, Sarah, that people are open for business. As I said, conducting business as usual. But I think probably, some of the excesses that, by the way, weren't in the banking system, I think probably you'll see, some of those pulling back a bit.
Elizabeth Warren's got this op-ed in the Times where she basically says, "I told you so." And when back in 2018, when these rollbacks were occurring, sort of predicting, in her view, the excesses that were to come. Do you think she has a point?
No, I think, Carl, within the banking system, I can tell you, we're a Category 4 bank. We are extremely regulated. We're subject to stress tests every single year. We conduct our own stress tests constantly. So at least from my perspective, I don't think it was lack of regulation. I think it was a matter of a lot of concentration and perhaps not the best balance sheet positioning.